Good morning, or good afternoon. Today is June 23rd, and it is now noon or 12:01. I maybe got late by a minute here today, but I wanted to welcome you again to my podcast weekly every Wednesday at noon. Here to give you as much information as possible on real estate and share with professionals or consumers. What it looks like from an expert's point of view to purchasing a home, investing in a home, or either selling your existing home. Okay, I have a few things that I'm going to throw at you today. To get started, however, I'm going to I'm going to start by saying Happy Father's Day to those that I haven't spoken with this previous weekend. Sorry I missed you. Sorry I didn't contact you. But you were in my heart. I guarantee you that. Okay. Yeah, I got a suntan, and it was a lovely weekend with the children. And we went jet ski riding in the Lake Conroe. By the way, if you don't know Houston very well, Lake Conroe is a very, very large body of water. Honestly, you got me. I don't know exactly if it's definitely a lake. I don't know if it's man-made. It does feel like it's man-made, okay, guys, but it is huge lake, man. I swear to you, it feels like an ocean inside there, okay? I mean, the water is choppy like an ocean, but it's fresh water. So it's real nice. You get suntan real fast, and we certainly enjoyed a whole lot having the kids around, man. But I'm so beat up, man. I toured these kids through that lake all weekend long, and it was quite a toll on my body, I can tell you that, and my skin apparently, right? But anyways, I'd like to ask you, how do you take your coffee? Well, I do straight up black coffee, and it could be anything. Okay, Colombia. But my favorite is the Texas pecan. Pecan is that a Pecan? Pecan, Texas pecan. That's my favorite flavor. Although there are Bristella, it's quite one of the ones that my wife uses all the time. But I take it black, no sugar, straight up right away. And I wanted to share with you also um, a book that I just purchased. It was referred by an associate, a real estate associate. We were at Mastermind last week. So he referred this book to me. It might be upside down, Profit First. I'll share my thoughts about this book here coming up maybe next week. Hopefully I'm done then. I do have another one that I'm working on, so I'm not sure if I could be able to do both at the same time. But this is another book that I'm excited to read about, and I'll tell you all about it next week. Okay. And I want to throw in a few questions. I want to go in here real quick on my Facebook and see if anyone is connected already. I want to be able to be live and ready to go for any questions. Whoa, hold on a second. Yeah, it is live. I have one viewer, probably my dad. Thank you, Dad. How are you? I'll see you next weekend. By the way, I'll be in Miami next weekend, and I'm very happy to be able to see my parents, my mom, my dad, and possibly my brother Rodrigo, my friends, Steve, Lela, Danish. I'm coming, mammy. I'm coming. I want to see y'all. All right. Let's figure it out. Something. It's very short. It's just a weekend. I leave Monday. Get in Friday night and leave Monday. So everybody here in Facebook know my itinerary now. Don't be calling me to say, "Oh, you didn't see me." I love you too. I love you too, and I want to see everybody. But it's very short. It's one of those weekends that I'm going to go in and out just to accomplish a few goals, and I'm sorry I won't be able to see everybody. Okay. But anyways, today I'm going to do some Q&A, some questions and answers. Some of the most common questions that I get here on real estate all the time, and I'm going to address it to you today. And then after that, we're going to go into a little bit of an educational row, and we're going to show you how to prepare an offer on ZipForm. Not all the agents use ZipForm, but I do. And this is one of my favorites. I don't think I utilize it 100% of the software, but because it can adjust a couple of things and do reports for you and all that jazz. But we'll get into details in a little bit. But anyways, I am here to answer a couple of questions. And one of the ones that I get the most is, how does earnest money work? That's the most frequent question that I get when somebody is putting an offer on a home. Okay. Earnest money is much like a deposit whenever you're doing a lease, a security deposit, much like it. It is, however, different, but you should consider it as a good faith to the seller that you're serious and you have the money, at least the um, a percentage of the money that you are indicating on the contract that you're going to come up as cash when purchasing a home, your down payment, for instance. Okay, but it is really a good faith deposit, let's say. All right. So earnest money is usually 1% in my market area, the Houston market area, but I've seen it where it can travel north to about 2%. And sometimes you don't see a percentage per se. You just go with the dollar amount, a strong dollar amount, 5,000, 10,000, 20,000. And in some markets like California, I would say probably when you're dealing with sales prices in the millions, there, earnest money deposit may be much higher. Okay, but for the most part, in my market area, and I think the average in the United States is 1%. Okay, so 1% of the sales price is your earnest money. What do you do with that? Okay, well, so your real estate agent will ask you, the consumer, to write a personal check, a cashier's check, never cash. Cash is not really that accepted. Um, yeah, there may be some fine lines in there, like New York is contesting stadiums for non-cash usage. I'm not sure if this will apply to me as well or to the real estate industry. Well, as a matter of fact, if you are wanting to finance, okay, that particular home you're purchasing or putting an offer on, giving it cash is a problem for you. So we don't recommend you coming up with a bag of cash because you need to be able to source it. The bank that's lending you money is going to want to know where that money came from. Okay. Sometimes you do have records to where that cash came from, and that's okay. But for the most part, we want a personal check. That will suffice. Okay. Very easy. If you don't do personal checks anymore, you can get money orders or you can get a cashier's check. You walk up to your bank, your local bank where you bank, and you ask them for a cashier's check. Now, a cashier's check does have a cost. Okay. It's about 15 to maybe 26, $25 sometimes. I've seen as low as $5, but I think that price point has changed quite a bit recently. But so personal checks, guys, all you have to do is basically when your agent is preparing an offer for you, he is going to want to know which title company you're going to be doing your closing. Title company is the body, it's the attorney between the parties. Okay, who is going to prepare all the documents to convey ownership from one party to the other. Okay, they're the ones that are going to act as the middle person, and they're going to hold all the funds for this transaction in an escrow account, much like maybe a trust account that you trust, an escrow account. Okay, that money is not the title company's money; it's everyone else's money in that transaction. Okay, so your earnest money check goes into that account, and it's very well kept bookkeeping wise. Okay, so it is tagged with transaction numbers that indicate that that money belongs to the particular transaction, all done by a title company system. Okay, but anyways, yeah, earnest money is like a deposit and a lease. But it is more like good faith to the seller. Hey, listen, I have the money and I'm willing to put that in the line here in order for you to accept my offer that I am going to eventually in 30 days close with my lender. Okay. Anyways, that money becomes eventually becomes credit towards all the costs that you may have in purchasing that home. It will become like a credit. Uh, hey, Dad, what are you waiting for? I'm not sure what you're waiting for. Just send a message. What are you waiting for? I'm not sure. You were waiting for me to get there. I'm getting it. Okay. Oof. I'm slow. I'm slow. I'm sorry, guys. I gotta drink more coffee. But anyways, for me, yes. You see, yeah. Thank you. I'll be there, Dad. I'll be there. I'll be there soon. Um, so, anyways, earnest money will be eventually credited to you on the day of closing. It will reflect on your closing disclosure, okay, as credit. So let's just say for you to close on this loan and close on this home, you need to come up with $5,000 total, including down payment, all the credits, and all that jazz. Okay, out of those 5,000, you already gave 1% of the sales price, and it was $3,000 for the sake of an example. Okay, so that means the sales price is $300,000, right? So you gave 1%, it's 3,000. So that 5,000 minus the 3,000 you already gave up front, then all you have to write a check at the day of closing is 2,000. Makes sense? Very easy math. You're giving that money up front. It's being held by the title company, and it will be credited towards your closing cost at the day of closing. Got it. If you have any more questions, go ahead and right here, I am going to closely monitor all the questions. My dad is laughing at me because I'm just slow today. And another question for you. Should I do a home inspection? Absolutely. Honestly, I tell all my buyers that if you do not have money for an inspection, I will buy one for you. I do not want to go into a home purchase without having an inspection. Absolutely not. It's part of me making sure I'm keeping you in the safe zone, guys. You want to make sure that, and I'm going to show you here in a little bit when I put together an offer. You're going to see what is there to us to protect you, while you're doing an inspection. Okay. Yes. Why do a home inspection? Well, there's several reasons why you should do a home inspection. And one of those reasons in particularly is that you might find things that you didn't know about the home. You might find things that were previously disclosed. I think on a previous week that I had a podcast on selling your home, we talked about, finding repair items through inspection. Well, so there are a couple of things with inspection that I must advise you as a consumer and all the maybe agents that are listening to me as well. Okay. For one, I think agents need to better educate their consumers, their buyers, their clients into how to look at these inspection reports. And for one is all homes have a large list of things that need to be done with the house. I mean, if the house is packing 10 years of age, it's 10 years old, there's going to be a good amount of maintenance that are maybe not up on maintenance that are, how can I put this? Things that maybe you couldn't get to. Okay. About, but you couldn't get to. You didn't have the time or the money to do, or you didn't know about it. I mean, there's a lot of maintenance that, homeowners don't know about that they need to be doing. Maybe on the next podcast, I can do a full maintenance schedule for you, the current homeowner, to do in your home year long. Hey, just had an idea. That's what I'm going to do. That's what I'm going to do. I'm going to next week prepare um, a full schedule of maintenance for you to have in your current home. Okay, year by year, month to month. Okay, we're going to go through that next week. But anyways, should I do a home inspection? Absolutely. It will cost you. It will be money out of pocket. But rely on your real estate agent to deem that particular home worthy of an inspection. Because believe it or not, you may be working with a buyer that is looking for a particular home. There are a few available on the market, and you want to be able to narrow down to the ones, that one home you like the most. And in that home you like the most, you're going to be doing an inspection on out of your own pocket. But what happens that when you do a home inspection, you find things that are completely a no-no, stuff that you don't want to deal with. You know, you found a foundation crack or elevation on your foundation that was too much and it needs to be repaired right away. Or you found some braces missing on the attic that, you know, soon enough your roof is going to crash in. You know, things that are going to cost you a lot of money. Or, you know, you found out that the AC is actually 25 years old and it's really at the end of its life and it needs to be replaced. Okay. Well, and the seller is not willing to do any of that. He wants to sell the house as is. Well, so in that particular case, you put that money up front on an inspection, and you're likely going to back off of that contract. And you're looking at finding another home and spending inspection money on the other home as well. So what if you go through 5 or 6 of those? You need to be able to budget for all the inspections that you're doing. So you need to rely on your real estate agent or the one that you can find in your local area, okay, that is been highly well reviewed and recommended, and rely on him to deem that home worthy of an inspection, or else you may be risking and just throwing out money out there on multiple inspections. Yeah, a lot of work for your agent as well. I mean, if he's not good in what he's doing, you're looking at writing like 5 or 6 offers, you know, different offers, right? Because for you to be able to do an inspection, for one, your home have to be your offer have to be accepted, right? So therefore, you're writing new offers, different homes, right? And you're doing different inspections. Often enough, having a good inspector is very important as well. You know, your agent should be able to recommend you one, or you can go to Google. Typically, your agent will recommend at least 3. Okay, by the way, and you got to make sure that your agent is not in the cahoots with that inspector. I know that that doesn't hardly ever happen, but too, if you have an agent, an inspector that gets a lot of business from your agent, okay, he is going to be a little bit nicer to your customers for the sake of you not losing a deal through inspections. Well, personally, I don't care. I want you, the inspector, to find every little bit of information for my buyer to make sure that when he's currently living in that home, he never calls me back and said, "Your inspector sucked. We found these issues with the home. If I had known that before we closed on this house, I would have backed out of the contract." You never want to be caught in that situation, okay? As an agent to agent, okay? So yes, do an inspection, please. Should I do a final walkthrough? Absolutely, yes. You're not required to do one. And by the way, on the home inspections, you're not required to do one either. Okay, I'm just saying it is very recommended, and I'll force you to do it. Me personally, I will force you to do it. If you don't want one, because you can't afford it, I'll make you agree that I'll pay for one. All right, but it's optional. Should I do a final walkthrough? Yes, you should. It's also not a requirement, but a final walkthrough is basically, let me give you this straight up. You visit one time to see the home when it was listed on the market and available for you to put an offer. Okay? Your offer got accepted. Forgive me. Your offer got accepted. You're going to do an inspection. You're likely going to go there with your inspector. I do recommend it. You're going to learn a whole lot about the house. Just don't bother the inspector. Let him do his work. But go there and ask questions at the end. So that's your second time you're going to visit the home. Then there are maybe another 20 days worth of underwriting of your loan. If you're not buying cash, your financing process is going to take over from that point on, where there's an appraisal, there's underwriting questions about your personal life and finances. That could be 10 to 20 days more after that second visit. So for 20 days, you won't see that house again. All right. Let's say you did do an inspection, and then through that inspection, you asked the seller to do a few repairs. That repair wasn't, you need to check on it before you close on the home. Because once you sign the dotted line and they give you over the keys, that's it. It's done. So that final walkthrough, I usually recommend it a day before the closing, and that is to make sure that the seller did all the repairs that you requested him to do. Okay. I am going to be a few weeks ahead of that, asking for a copy of the invoices that were produced by any contractor that came over to repair something. Okay. But you want to go check it yourself. And usually I go there with you. I walk with the list of items that we ask repairs, and we're going to make sure that we're repaired. But another thing is important to do the final walk is, you're relying that what you're signing the next day, you're signing on is exactly what you seen when you first visit that home, right? What if you do that final walk and you find it that since then there was a big rain, a hailstorm, and boom, you had a leak in the ceiling? What do you do there? So you're exercising the contract an extension for situations like that. And that could be a problem. So walkthrough is definitely not a requirement, but very much recommended. I do it. Some like to do it an hour before closing, just to be sure, right? On my previous podcast, I mentioned it again. I mentioned it to you how often sellers run into issues the last day of the contract, and he's got to do whatever he's got to do to repair it before you close on it. You don't want to buy the house if there's got problems that you didn't know about. You know what I'm saying? That it should have them all be disclosed. You saw the seller's disclosures, you saw the inspection report, all of that should have given you a pretty good picture to what you're getting yourself into. But last minute, it's a good final walk is a good thing to do to make sure you don't get caught by surprise. Again, sign a dotted line, you get the keys, man, it's done with. The house is yours. I mean, of course, it may be some legal potential there, some legal remedies you can take, actions that you can take afterwards, but nothing is guaranteed, right? So yeah, do the final walk. I'll schedule one. As a matter of fact, whenever I have a client under contract, I build a system for them that reminds them of all the important dates. Okay, and therefore you're going to see on the timeline where that walkthrough, it's already there, set up for you. So if you're following my directions, you're going to do one. Okay, and that's what you need to be comfortable with. Rely on your real estate agent to set up all this, to properly guide you towards how much to put in earnest money, also get you through the inspection process with flying colors, and schedule your final walkthrough before closing. All of those things are for your own good, to make sure that you're buying what you believe you're buying, right? That you knew you're buying. Anyways, okay, so this is a Q&A. I have a question here from Chris. Keep up the great work, John. informative podcast. Thank you, bud. Appreciate it so much. Thank you for the opportunity. And if y'all have any questions right now, I'm going to be moving on to the more of the educational road, how to put together an offer. And this offer is going to be hypothetical, of course. I am going to choose one of my own listings, and I'm going to go ahead and prepare an offer right in front of you. Okay, so if you're a consumer or if you are a real estate agent, please go ahead and tune in. I think for both of you, this is going to be good. It's already been 30 minutes of the hour, and hopefully I can cover it most within 30 minutes. I do want to close this in within an hour. We go from there. All right. Okay, very good. Let's go and do this. Let's share a screen here. Not this one. I don't want to share this screen. Okay. Let's go ahead and share screen. Zoom, where are you? Zoom, where are you? Here we go. Share your screen. This screen right here. Or this is difficult, guys. Sometimes I don't know which screen to do because I have multiple ones. I want the actual Chrome. I think I'll stick with this screen here. Yeah, I'm going to do anything that is on Chrome. It's going to be shared. Okay. All right. If you guys see any issues, let me know. Okay. So it's anything that is on Chrome is going to be shared. Hopefully, I don't know. Maybe I should share the whole computer. It'll be easier. All right. So what you're looking at here is one of my listings here in Katy, Texas. This home, as a matter of fact, went under contract just recently. And I'm going to go ahead and try to change that pretty soon. I have to put it into a pending, option pending right now in order to comply with the MLS rules and the contract. And I am going to, pulling up here, where is my zip form? Oh, there you go. Zip forms. I hope you guys are seeing this. I'm not sure if I'm sharing this correctly. Yeah, looks like I am. All right. Okay. Good deal. So this is zip form here, guys. All right. So a lot of agents use this. If you're an HAR, if you're in Houston Association of Realtors member, they will give you access to zip forms as complimentary to your membership. Okay. And you would have access to it. But some agents use dotloop. Some agents used, I don't even know. That's the two I know the most. Zip form is what I've been using for the last 8 years, period. Okay. Anyway, so basically here you want to put the name or the property address. Okay. So in this case here, I'm going to put, I already have one for, I'm going to put it on and I'll delete it later. Moscone Court is the address. And what I like to do is put the name of the buyer right next to it as well. That's a good thing to do. I'm going to put John Smith as the buyer. This is a residential property, and you can see you can do all the things. You can do farms, you can do condominiums, commercial, vacant. You can do all of those things here. This is a tool that you have to pay for. In addition, I think once a year, the MLS Connect. Basically, what you do is if the home is already existing on the market, you can pull up more information about it by just copying the MLS number and putting it on here. And then you say you want to include the photos, the property photos. And it will find that listing for you through the MLS and pull some information. But now I have come to some senses here that this MLS Connect doesn't pull all the information, but doesn't quite put it in the right place. So you still got to go back in there and go through the entire contract, make sure all the blanks are filled correctly. Okay, very, very important. So when I'm done here, here I have templates, okay? I have a ton of templates, but I'm going to start by doing something a little bit different. I want to teach you how to organize yourself a little bit better. I'm not going to have any templates, and I'm on the go. I'm going to put together all the documents that I'm going to need for this offer that I have to be making, okay? Let's just say this is a brand new customer that is putting an offer on this house. And we're going to go see this house and put an offer together, okay? So there you go. Save. Now you're going into it. First things I do, me personally, there may be different ways to do this, okay? What I do is I go to parties first, make sure all the parties are there, okay? So, well, I am already listed as a listing agent in this particular case because I was a listing agent on it, but I'm going to do it a little bit different. I'm going to put myself as a selling agent in this particular case, and show you what you have to do in this particular scenario if it held true. Okay, so you're going to find myself in here and in your contact list, and we're going to put it up there. So now I'm also the selling agent or the buyer's agent. Okay. And you want to go to buyer number one. And in this buyer here, you want to put his name, complete legal name, okay? Whatever you see it on the license. And John Smith right there. You want to put where he's from, 123 ABC Street. That's where he lives in Cypress, Texas. And this is my zip code, okay, by the way. You're going to, I'm going to put here an email because you're going to need an email for this person. So you're going to put abc123 at AOL.com. How about that? Didn't type anything. Shoot. abc123 at AOL.com. All right. And that's about it. You want to put a phone number for that person. And by the way, for instance, if you put a cell phone number, it won't populate where the phone number is for your representative agreement. Okay, so you want to put their phone number, the main contact, right there on that spot where the home is. Okay, so let's put 832-303-2719. That's nobody's number, guys. Okay, let me put 444-6666. Okay, whatever. All right. You want to save your contact. In this case, I do not, because this thing will stay there forever. I put the zip code in the wrong spot. I'm not going to save it. I'm just going to save it to this file. Okay. So John Smith is buying, doesn't have a wife or significant other or a buyer or a partner, forgive me. He's doing it on his own. Okay. So I make sure I put those in first. Okay. Documents. So it'd be nice for you to first create a folder for your documents. Okay, so I would add a folder here for the offer. Okay, so you go on in that folder and you go to all forms, and I go for all forms here to make sure I'm finding them. Okay, the most important one that you need to know right away is that here in Texas, it is a requirement that the first substantial contact with a consumer, you must provide them with this form, information about brokerage services, okay, for the buyer, right there. And I'll show you what that form is here. Basically tells you all the types of real estate license holders and the minimum duties required by law for that real estate agent to give to the consumer. And what we want to be able to do here is make sure that you understand that who is representing you, who holds the fiduciary duty. Fiduciary duty, it's a mouthful, that you have with, who has it with you, you know, whose interest are you protecting? Okay, So you need to understand which side is that real estate agent that you're working with, or showing you the home, or talking about substantial amount of information in regards to a particular real estate property. So this form takes care of that. Okay, it's going to indicate who is the buyer's agent, who is the listing agent, and at what point as the agent is for both, or intermediary. Okay, where that agent is representing both buyer and seller. So this must be produced at the first substantial conversation or contact. They say first contact. Okay, so you first meet that consumer. Information about broker services. It's kind of stupid, but it makes sense, because a lot of times agents is like, oh, I didn't know the difference between a buyer's agent or a listing agent. That happens more often than you think. Okay, sometimes for ignorance, and sometimes just basically you're just playing that dumb role. Oh, I didn't know. Well, this form here should help you know about it. Okay, but a lot of times consumers don't want to sign this because they think is a contract between that agent and yourself, and you're not ready to engage in any contract with that agent yet. You just met. Well, it is not a contract. It is a notice. Okay, just a notice. All right, and there are different ways to present that to your buyer or to your prospect buyer, and one of them is not being rude. Okay, it's properly explaining what this form is. On another podcast, maybe we can talk about it a little bit more and how to present this. Okay, but here you have to fill it up. You have your licensed broker information in there, your primary business name, your designated supervisor, and you have the emails and contact phone numbers, so you know who you're dealing with. In any case you're having a problem with that real estate agent, you now have the ability to contact their broker, okay, or their supervisor. So that form goes in there. Get back in here. The second form that I like to put it over here is a representation agreement. Just put wrap on it, easy. You find it there, representation. Here is what it looks like, residential buyer tenant representation agreement. So you can use this for both purchase or representing a prospect to leasing a home. Okay, so this will be an agreement between the agent and the consumer, the buyer or the tenant. Okay, and this is the actual contract that sets a term in between the agent and the consumer. And terms are going to be in there, but this is not what this podcast is about. I'm not going to teach you about that. Okay, I'm writing an offer. This needs to be filled out. Obviously, if you're going to write an offer for somebody, you need to be under contract. Okay, by the way. Then the second form I'm going to put up here is 1 to 4. And that is because the home that I'm using as an example here is classified as 1 to 4 unit residential contract, home, okay, property. So you use the family residential contract. Second form that I like to put it here is, well, you know you're going to use financing, so you need a third-party financial agreement. Okay, and you know this home is going to be on a mandatory membership association. In other words, there is an association that controls the subdivision. You need to be able to disclose that to your buyers. So you add the addendum for property to mandatory membership. And then what else you put together here, guys? What else? Well, let's just say this home is, and we can check over here. If you go back to Matrix, we go back into this page right here, we can tell that this home is on a municipal urban development information here. So this water district, there's a water district in Houston, not very common in certain, and not very common in all the states, all the cities, but in this here, they do have sort of like a water treatment facility that holds this municipal, it's, it's development, and it's called MUD, okay? MUD, Municipal Urban Development, okay? This home is, he's on the Harris County MUD District 127, and all this information you're going to need to be putting on a water district notice, okay? So you put water and notice to purchase the property in a water district. That form needs to be there. Okay. What else? Any more questions here, guys? Anybody else? Anybody else coming up? I'm not quite sure. No more questions here so far. Anyway, so what else? What else? I'm trying to go here and remember everything I need to put an offer here for you guys. Okay, by the way. All right. Okay, so let's say this home has a refrigerator and has a washer and dryer that is going to likely stay with the home depending of how much you're going to offer for that house. Okay. In that particular case, here in Texas, refrigerator and washer and dryer are personal. They're not a real estate item. Okay. They don't belong to the house. Okay. Unless you put it there. All right. So it is not attached to your house. So therefore, if you buy a house and do not put the non-realty item addendum on it, you might not get that refrigerator or washer and dryer. Okay. So real estate agents out there, I tell you, this is one of the most common items you forget. And you misrepresent your buyer because originally your buyer wanted to obtain that refrigerator, wash and dry. There was that in the house, and you missed it. Okay. So that form is important to be included. And I'll show you how to make sure it is all part of the contract. Okay. A couple more things here. You want to always rely on your disclosures. Okay. So let's go about putting some insurance disclosures in there. So you're going to put information about property insurance. You want to make sure your buyer is fully aware of all the insurance requirements for this home, particularly if you're doing financing, okay? Also, you're going to want to do something about flooding. You see, something that my broker and I agree very much is, regardless if your home is not in a flood zone, you should include information about special flood hazard insurance or special flood hazard areas. Okay. For one, FEMA can come around at any time and deem your home in the flood zone from one day to the other. All you needed is one big old rain and that water to come up high enough that is now FEMA decided to make your home in a flood zone. Or let's say your home did flood at one point or flooded afterwards, after you purchased that home. It never flooded before, but when you purchased it, it did. And not because of you, but it did flooded because Harvey or whatever big old storm came around and had more water than the previous rains or storms. And it flooded your home. Well, I did my due diligence to let you know that, you may not be in the flood hazard area, but one day you can. All right. So we'll go ahead and include that into that pile of documents. And boy, there is a whole lot of them, right? Oh, Jesus. Well, yeah, a lot of the things here is for protection. A lot of the things here is for liability purposes. You should be able to see all of those when you're putting an offer putting an offer on a home. Okay. You're going to be signing these. If you're not, then you're missing stuff. All right. Now the other ones is, general It's a big one, and my broker wants it. Make sure that everybody have the general information and notice to buyers and sellers. Okay, basically, this one is going to give you a whole wide range of terminology in regards to purchasing a home, and it's going to kind of give you a guide to all the instruments that we're going to be using to purchase that home. The appraisal, what the inspection is, what flooding is, what, if you don't know a whole lot of buying a house or what a house is like, or if maybe your agent doesn't know a whole lot, he's going to use these forms to kind of guide him as well and protect himself, make sure that in the court of law, he has shown you that information. So it's wise for you to read it, make sure you do understand it. There may be some cases that you dislike something and you get discouraged to buying a home. Okay. But I tell you this, a lot of these documents, if you don't sign it, don't agree with it, you're not buying a house. Could tell you that. All right. So, yep, it's important for you to understand it. What's the other one here, guys? I forget. Broker notice. It's right there. Boom. Broker notice. Again, that's another form for liability purposes. It's the notice that a broker is giving you, the buyer. It looks like this a little bit. Okay, so environmental hazard inspection. So if you're buying a farm, a ranch, or a vacant land, you want to know what the environmental hazard situation is. Okay, so sometimes you do an environmental inspection to make sure there is no animal that are being protected over that land, and be sure that you're not killing the habitat of that animal. Okay, because those are pretty protected. Okay, so environmental hazards can also mean solvents in the surface or below the surface of the land, where you won't be able to put a fixed a structure on top of it because it's going to be so volatile. I remember back in the days, there was a situation where a building was being used for laundry. So it was a laundry machine, a clothing washing machine. So there was a large possibility of soap spillage in that ground, in the ground there. Okay. That building eventually got demolished. And what do you know? The developers who bought that land had the intent to put a building together in there, and eventually they had to inspect the land to make sure they can put a building in there, and they found residues of soap. So that was a problem. They had to cure that soap before the engineer, the permitting engineer part of it was going to allow you to build it. Okay. Yeah, I'm a little slow today, guys. Forgive me. And I need to hurry up. Anyways, another situation was a racetrack here in College Station that got sold to a large developer. Before they bought that house, they assumed that there's going to be a lot of oil spilled from cars that have broken down or got off track. A lot of oil spill. So they want to inspect to make sure the amount of oil that have penetrated the soil there, because it can all affect the structure of a foundation or that you build on it. Okay, so I'm not an engineer, so there's more to it involved in that. I just wanted to give you an idea why you do the environmental inspections there, physical condition inspections, and the MLS information is what we are being able to obtain from the seller if we're representing the buyer. Okay, so those forms are all required there. Nowadays, one very important one that my broker, forgive me, is requiring me to put in is wire fraud warning. A lot of wire fraud going on, guys. A lot of wire frauds going on. Somehow the thieves are intersecting the communication between agents, title companies, insurance companies, lenders, whatever. Somehow, maybe because the buyer clicked on the link that he shouldn't click, or or the lender is already infected, or the title company's computer is already infected, or whatever it is. So now we're giving you a wire fraud warning. And with that warning goes that you have to make sure who is requesting that information from you, your banking information. You got to make sure that the title company that has just contacted you is the title company that you are hired to convey documents for you. And yeah, that's a warning we got to put together there. Okay, so what else do we got to put it in here? Am I missing anything? Yes, my broker likes this also. Relationship. Okay, disclosure relationship with residential service companies. Okay, so this form here basically indicates that if you have any relationship with another service company that you referred to your buyer, who you have the fiduciary duty and best interest, but in let's just say you have a relationship with that other servicer and you're making money because you recommended your client to that service company. You need to be able to disclose that, okay? So that form does that for you. Okay, but let's go back into the most important here. I may be missing something here or not. I think I have a pretty complete one. There may be other situations where it calls for additional forms. In this particular, like for instance, if your home was built before 1978, then you need to disclose lead. So there's a lot more information here, a lot of documents you have to add. Let's say your home is in a septic, your home is in a located where there is no direct contact with the sewage system, so you have a septic tank in there. So there's more documents involved with that. So there's a whole wide range of other documents you put it in here. But for the most part, we covered the information about brokerage service that needs to be filled out. We covered the representation agreement. I didn't go into details on that one, but I'm going to 1 to 4 family residential contract. Okay, so the seller is Amber. Common name. What's the common name for ladies? I'm going to use Smith. So another Smith here. Whatever. Amber Smith come around and she's the seller. You're going to make sure, and the best way to do it is to go back to the records, go to the showing instructions and make sure that it says seller's name there, or you can go to public records like I did here, and you pull the name from the very top of the public information here, and you pull the name out, okay, and make sure you have the right spelling, okay? Sometimes it is okay for you to leave it in blank and let the listing agent do it. I don't like it. So I'll contact the listing agent and I try to get exactly what the seller's name is, okay? Let me see if I'm able to zoom in this in for the sake of you guys being able to see this much better, okay? Here you are, okay. All right. Okay, so here in Texas, you want to make sure that you have the property lot, block, and any additional information in regards to that subdivision is in there. Very easy to find on public records like legal description right there. So this one we know it's lot 91, block 5. It should have been populated automatically, but it didn't fulfill my RV. So that MLS Connect thing is failing there, right? So what is it again? Lot 91, 5, block 5. And we know it's Brandwood Trails, but it's missing some information there too. Look, section 1. So make sure that is complete. This is the right way to do it. City of Katy, County, Harris. This is known as 6014 Muscone Court. The zip code is right there. Exclusions. And again, whenever I'm discussing this with a consumer, I rely on the fact that eventually you're going to want to read the entire contract, okay? But again, I want to say that this contract here, my state here is promulgated by the Texas Real Estate Commission, okay? So their attorneys have already made sure that this is the right contract, one that you can rely on. Again, we covered in the last podcast where you can have legal assistance to review this contract for you. Your agent is not an attorney. Remember that, okay? But he should know how to prepare this contract for you and what each one of these clauses mean, okay? But when I'm talking to a consumer is I am here more to go over the informations that are in blank that I can feel and make a difference on, okay? Everything else, if you do have um, everything else, if you do have a need to understand what improvements are, accessories, go and read it, okay? Before you sign that contract. Read the contract, okay? But I'm here to prepare an offer. So I'm going to go over all the blank spots of this contract that you need to know and how to best put together, okay? Exclusions. You need to figure it out if the seller have indicated on the MLS if there's going to be any exclusions to what the to the house. Okay, so in other words, let me give you an example here. Let's say there was a mirror attached to a certain wall of that house that now it is built in, and the characteristics, the character of that home. You love that home. You fell in love with that home because of the character, that a mirror that was attached, it was a fixture attached to, like it was drilled into the wall. And if the seller decides that he's going to remove that mirror from the house, he needs to put it on that exclusion list right here, this field. Okay. In this case, there was no exclusion list, so we're going to put not applicable. I just realized, guys, that this is going to go way over an hour if I want to make sure this is done right. Okay, so hang with me. Let's see what we get. Okay. There is one person watching. I think it's still my dad. Hello, or somebody else. I'm not quite sure. I can't say who it is. Okay, so in this particular case, you are now filling out all the blanks for that offer for your consumer. And you need to figure this out here very efficiently, okay? You want to know how much your buyer wants to offer for this house. So I'm going to skip a couple of steps here so we can prepare this a little bit better for you. But you have already sat down with your consumer and discussed with him what price does he think it's fair for him to purchase that house. Okay, so you need to work that out with your buyer. Your buyer has the ultimate decision to how much he's going to be offering that house. We know here in this particular case, it's been offered at $245,000. The seller wants $245,000 for this home. Okay, will you offer the $245,000, or are you going to offer less, or you're going to offer more? Right now, it depends to how much you want this house. It depends on the market season that you're in. Several things. So I'm going to skip this step here where you and I, the consumer, had a conversation to what you think is a fair offer amount for this home. In this particular case, I'm going to go and say that you and I worked out that we're going to offer exactly what the seller wants. Okay, $245,000. Okay, but you're doing a conventional 5% down payment to finance this house. So therefore, we know that there's going to be some financing requirements. Okay, and then we're going to check this box that says the sum of all financing described in the attached third-party finance addendum is going to be X amount of money. Okay. Now, if this was cash offer, then you just uncheck that. You put the cash portion as $245,000. Oh, not 2 million. One extra zero there. $245,000. So this is a cash offer in this section right here. You're offering $245,000. But if you're requiring financing, then you're going to check that box over here and take that away. And you're going to figure it out what 2% or no, in this case, we're going to offer 5% down payment. Okay. What 5% down payment equates to, it's 12,250. Okay. And then you're going to put in right here 232,750, which is the amount financed. If these two numbers together does not come out to the sales price, that the offer amount that you want, then these numbers are incorrect. Okay. You see, it auto populates the sales price by knowing the amount financing, the amount of portion in cash that you're going to give. Okay. That portion in cash is what they're expecting your down payment to be. Okay. Going down to leases here. This is a new section that just recently came up in case the home is being leased already. So, and for the sake of this offer, no, we're not leasing anything. There's no fixtures being leased, and there's no natural resources being leased either. We're going to skip the section. Seller has, there's no natural resources being leased. Okay. It's a brand new section, and I have not yet used. Apparently somebody ran into an issue, and eventually they decided, the Texas Commission decided that this is important to have it on the contract. Maybe there was a additional document or addendum that you could have added to the contract here in case you did have natural resources, leases there, like oil, petroleum, right? And in this case, or natural gas by any means, but maybe they just decided to kind of put it all together in one recently. Okay, this one's done. Let's see here. It used to say here when it was completed. I can't see it right now. But anyways, moving on to the second section here. Section 5, earnest money and terminations. This is, again, one of the questions that we had, the Q&A that we had earlier in the video. We have here 5A, delivery of earnest money and option fee within 3 days after the effective date. Buyer must deliver to, you put the escrow officer, ABC escrow officer, right there. Typically the name of the title company, okay? Or ABC title company. How I do it, and I put the name of the escrow officer next to it. Okay. And you put the address, 123 ABC Street, and you miss Suite 100. These places do not exist, but I want to be as complete as possible so you can see where we go with this. Okay. How much was the sales price? $245. That's what we're willing to offer. So therefore, we're going to be giving 1% earnest money. We talked about it earlier. So let's go back. 245,000. Very easy calculation. You should know by heart what 1% is. But for the agents that don't, you go times 0.01 and you get 2,450. As your initial earnest money deposit. And this is great. Some states don't have this option fee. In this particular case, the sort of average, the most common option fee here, it's usually $250. That's what they're going for right now. And I'll explain that in a second what that is. The earnest money and option fee shall be made payable to the escrow agent, Smith, and may be paid separately or combined in a single payment. Okay, so this is completely new. This just recently got changed. Okay, last year we didn't have this. It had to be one check for the escrow agent and one check option fee to the seller. Now it could all go to the escrow officer, and they do the bookkeeping, they do the disbursement of that option fee and escrow, and it's due time. Okay. So buyer shall deliver additional earnest money. So you can, in your offer, say that, I'm going to give you $24.50 right now for earnest money, but in 10 days, I'll give you another $2,500 towards earnest money. This thing is hardly ever used, but it can be used. In this case, we're not. Most cases, we're not. So I am just going to fill this blanks with not applicable right there. Now, 5B, termination option right here. For nominal consideration, the receipt of which seller acknowledges in buyer's agreement to pay the option fee within the time required, the 3 days. Remember, it was up there, 3 days. Okay. Seller grants buyer the unrestricted right to terminate this contract by giving notice of termination to the seller within, and you put the date there. Okay. So whenever the seller is looking at this offer, let's imagine that he has multiple offers in his hand. One has only 5 days that the buyer can back out of this contract or terminate this contract, and the other offer has 7 days. So which one is more attractive, right? So because after this option period, you cannot no longer use the option period to terminate the contract with unrestricted right, okay, or any reason whatsoever why you're terminating it. Okay, so typically the time we put in, the amount of days we put in here is the amount of days we're confident enough that we can get a property inspected, okay, because we use this nominal termination option for us to do our inspections without being 100% locked in. Could you imagine you bought a house and did an inspection, but yet you cannot get out of this contract even though you found major issues that you didn't know prior to the inspection? Why are you doing an inspection in the first place? Or would you do an inspection on the house before you even put an offer and the offer was accepted? No. So yes, so these commissions, and we're smart enough to put together an option period. I like to consider a discovery, because you're going to discover a whole lot of things that you couldn't discover before, because one, you couldn't do an inspection. You're not under contract. You're not the expert. So whenever you come in, when you come in and visit at home the first time, you're just like looking to see if your furniture works, if the layout is great for your family, if the house is attractive to you. You know what I'm saying? Can you see yourself living in a house? That's what you're looking for. So you can't discover anything else with that 1 hour appointment you had before you put in an offer in this house. Okay, so that's why this option period is here. So typically we go with between 5 or 7 days. Okay, so to be more aggressive, if you know you want this home and you don't care what's in the inspection report, let's say you're an investor and when you came and first visited the home, you already brought a contractor over with you, then you go 0 and do not give them a fee for that patient. If you've done everything you needed to do and you're sure that you want this house no matter what comes as is, then you put 0. That's the most aggressive. Sellers are going to love it because then you have no right to terminate under this particular clause here. Okay, so for the most cases here, we're doing an inspection, and 5 should be plenty of time. Okay, in some situations, buyers may be more comfortable when they have 7 days, and that's typical here in Houston, between 5 to 7 days. In this case, we're going to go 5 days, and notices under this paragraph must be given by 5 p.m. 5 p.m. of the day from of the day of the effective date of this contract. You have 5 days, right? Okay, so it must be given 5 p.m. by the date specified, right? So hold on a second. Some things I may have changed. Notices under this paragraph must be given by 5 p.m. local time where the property is located by the date specified. So if buyer gives notice of termination within the time prescribed, the option fee will not be refunded, and escrow agent shall release any option fee remaining with the escrow agent to the seller. So if you do terminate this contract, that option fee goes to the seller. Okay, it's basically the fee that you're paying the seller for have taken that home out of the market for you to do your due diligence. Okay, but again, the 5 days of the effective date. Okay, so and on that 5th day from the effective date, 5 p.m. is your cutoff time where you need to write a termination letter if you're terminating this contract. Okay. Let's go on. These items here are quite important for you to understand as an agent and as a consumer. If either the buyer or the agent failed to timely deliver these earnest money, in other words, 3 days, okay? If buyer fails to deliver the earnest money within the time required, seller may terminate this contract or exercise seller's remedies under paragraph 15, which we haven't gotten there yet, or both by providing notice to buyer before buyer delivers the earnest money. So in other words, if you don't deliver the earnest money and option fee within the 3 days, well, let's say you don't deliver the earnest money within the 3 days, then you forfeit this contract. Okay, well, the seller can terminate it for you. Once you sign this contract, you're under contract, guys. By the way, you are on. This is a binding contract. So once you sign it, you are under contract. So if you fail to deliver your earnest money, if you just, let's say I never deliver the earnest money, the seller may still consider that you are under contract and ignore the fact that you never gave the earnest money and exercise paragraph 15, which is likely a lawsuit. We'll go back in there and find out, okay? Or mediations to be able to get to the bottom line to this, okay? Do you want to buy it or not, okay? But either way, if you fail to turn that earnest money and the seller has multiple other offers, he's just going to really put you on the side and go for the other one, okay? And you lose that opportunity. So yeah, so when your agent contacts you and say, okay, I need you to meet me today and write me a check for the earnest money and the option fee, you want to go ahead and do it. Don't waste any time, okay? The agent might have failed to explain how important this is, but here I am as a consumer. You want to understand these sensitive dates here, okay? So 3 days to deliver that check, guys. 3 days, okay? Within 3 days. Does Sunday, that's a good question, does Sunday apply? No. Or any major holidays? No. So if it falls, that 3 day falls on a Sunday, the next business day, unless Sunday is it will always be a Monday then, okay? Now the option fee, if you fail to turn in your option fee within 3 days, let's say you deliver the earnest money to the title company, but you fail to turn in your option fee, what happens then? Okay, well, in that particular case, you won't have any right to exercise your unrestricted right to terminate this contract. You won't exercise your termination option. Simple as that. And I tell you this, agents, if you miss out on this, you do an inspection, the listing agent is being a smartass, you do an inspection, you find a ton of problems in it, he knows you never timely turned in your option fee, and then you go and ask for repairs, the listing agent can very much turn around and say, we're not going to do any repairs. Oh, if you don't do any repairs, we're going to terminate under the Section 5B. No, you won't. No, you can't. You won't be able to, man. You could try, but you won't. We won't accept it because you never turn in your option fee. And what could happen after that is that agent likely is going to end up paying for all those repairs. Yeah. Okay. So be real careful with these time-sensitive clauses here in this contract, okay? Failure to timely deliver option fee, like I'm saying, if no dollar amount is stated as an option fee, or if buyer fails to deliver the option fee with the time required, buyer shall not have the unrestricted right to terminate this contract under this paragraph 5. What I said, right? Okay, so time. So here's specifying very clearly what time is. Time is of the essence. So you need to take all time with the essence that it is strict and needs compliance, as it's saying here, with the time for performance is required. Okay, so failure of any of these dates and time restrictions, it can be costly for you as an agent and your buyer. Okay, you don't want to mess it up. Okay, don't mess it up. Okay, so section 6 or paragraph 6A, title policy and survey. This is quite interesting here, and I like to talk about it. Okay, I do like to talk about this section right here, title policy. Okay. So the seller is not supposed to be forcing you to choose whoever he wants you to use as a title company. So the title company should be an optional thing for the buyer. Okay. And there are definitely a lot of argument about this. Well, the seller obviously wants to use a title company that he deems that it is reliable and it's going to do everything in its effort to help the seller. Well, matter of fact is that a title company is not representing neither of the parties. So it doesn't really matter. Okay. They're not going to be doing any favors for the seller. But competency, is an issue when it comes to title companies. Some title companies will fail where others won't. Okay. And, but they're likely providing the same services of everyone else. If they follow the same path, they're going to likely provide the same service or better service than any other title company. Okay, so the way I think we've been doing here is if in this particular case here, there is a choice where the buyer or the seller will be responsible for the expenses and on the policy of the title insurance. Okay, so when you purchase a home, you can purchase, it's optional to purchase a owner's policy insurance. It's going to protect the history. It's going to protect your documentation. It's an insurance that all the documents in that commitment that was given to you is assured. Okay, it's going to ensure it that everything is correct. Okay, so let's just say, for instance, you purchased this home and somebody contested the sale of this home by saying this home 100 years ago belonged to me and it was improperly conveyed to somebody else, and therefore the sale that you've gone through is invalid. Okay, well, that owner's policy insurance is going to protect that event. It's going to be able to, one, investigate further and fund it. Okay, and in the event that there is harm brought to you, something that nobody could have known, this native came around and said, no, this land is mine, and I have a way to prove it. Okay, well, that insurance is going to cover you. It's going to cover all your damages. Okay, so yeah, it's optional, but it's something that we religiously been doing it for years, and you should continue to do it. But who's going to pay for it? So whenever we are working on putting together an offer, okay, of offer price, okay, we are also going to determine which one is going to be better for you to choose here. Okay, let's say you are offering maybe 5% less than what the asking price was of the home, and you want to make it so it's a little bit more aggressive. You want to pay under, okay, but you're also telling the seller that you are buying the owner's policy. So in other words, the seller doesn't have that additional expense. Or the other way around, if the seller wants to pick their own title company, I'm fine with it, but as long as the seller pays for the owner's policy. Okay, so those things that need to be talked to your consumer, or you, the consumer, need to be talking to your agent about. Okay, whether you want to pay for that title cost or not, that owner's policy, title insurance or not. Okay, it's a premium. Okay, at 245, I'm going to do a rough calculation here. At 245, I'm just quoting for the sake, at 245, you should be looking at this came out wrong. Okay, here you go. Should be coming around about $1,000, $1,700, $1,700. That owner policy would have cost either the seller or the buyer. So you need to make that decision when you're putting the offer, because this can, if you say seller pay it, well, so that $1,700 is coming out of the proceeds of the sales price over here, right? So it is sort of like a credit, okay? A discount of the sales price if you ask the seller to pay for it. So when you're putting an offer together, those two things need to be considered together, okay? But in this particular case, the buyer said, I'm going to offer everything for me to win this offer. I'm going to be aggressive. I'll pay for the owner's policy as well as the 245 that you're asking for. And you're going to put over here ABC Title again. That's who is going to underwrite and write you a commitment, a title policy, insurance commitment, okay? In this section here, I want to be careful with this. Not to look like a fool here, because it is hard to kind of understand here, but I'm going to go straight up to where I think we all need to do, okay? So if you're buying a house and you have borders, okay? You have borders around your house that are meets and bounds. And let's say here, these boundaries lines are whatever it's inside those boundary lines is your land, okay? But sometimes you have in different situations encroached in somebody else's property. Encroachments that may have been okay between you and the other owner, or whenever, let's just say, whenever previous commitments were done, these encroachments weren't taken considerations. Therefore, they look like shortages in the area. And will you choose to amend that in the new commitment or not, is the question. So in this case here, I always say amend it. There's a cost to it. And then you have to decide whether the buyer or the seller is going to amend it. It's usually, I think, $25 endorsements, if I'm quoting it wrong. Forgive me, don't not kill me if I don't know this correctly. But yes, title companies can disclose a little bit better for you. Will not be amended or deleted from the title policy. So I don't like that, because if those shortages eventually become an issue, you want it to be insured, okay? So you want to go ahead and check that box. And I normally say buyer is going to pay for it, because I don't think there's any seller that's going to agree to pay for this thing, okay? It's going to be very hard. You can try, but I don't think so. Okay. Commitment. So we're here in section 6 in commitment. So within 20 days after the title company receives a copy of this contract, seller shall furnish to buyer a commitment for title insurance and, at buyer's expense, legible copies of restrictive covenants and documents evidencing exceptions in the commitment. Other than the standard printed exceptions, seller authorizes the title company to deliver the commitment and exception documents to buyer at buyer's address, shown in paragraph 21. Okay. Typically, they don't do that directly to the buyer's address. They send it to the agent and rely on the agent to provide a copy of the commitment, although they should. Okay, once the contract is closed and executed and it's done with, okay, you performed fully with this contract, then you get the actual title policy in the mail by the title company. But the commitment is going to be likely emailed to the agent, and the agent is going to provide the buyer a copy of it. What we'll be looking for there is something to talk about in another podcast. Okay. Okay. So survey. Does your seller have a survey? Have he indicated that he has a copy of the service? The survey, is the survey in good condition, in a condition that will the title company, who is going to provide a commitment based on the survey, will ensure that survey? Will they accept that survey? Now, those are all questions that we need to be answered when you're filling out an offer. Okay. You need to know that ahead of time. Do not assume that the seller has a survey. You could, and it's going to fall in the listing agents and the seller's lap to whether accept an offer where option one was checked off, by the way. Let's give you an example here. Basically, you're indicating the seller that within, and I usually put 15 days, it could be shorter. It could be 5 days. You just got to be considerate that maybe you want to give the seller enough time to look for that survey if he hasn't found it yet, or or yeah, I mean, something like in that sense. Okay. Or if you're going to need to order a new appraisal, you need to give ample time to the title company to order that title company if you so request them to do it for the buyer. Okay. In this particular case, go ahead and put like 10 days or 15 days, like I do it here. But if you're choosing this section here, you're asking the seller that within 15 days after the effective date of this contract, seller shall furnish to buyer and title company seller's existing survey of the property and at the residential real estate property affidavit promulgated by the Texas Department of Insurance, the T-47 affidavit. Basically, that affidavit is indicating that the survey in which you are presenting to the title company to be used to be insured has not gone through any changes. Nothing changed in that property that may have caused that survey to be invalid. Okay, there's no changes to that survey. If you were to do another survey right now, it would look exactly the same as that survey you have. Okay, now if you recently changed your fence and you know about it, you're going to ask for a new survey. Okay. If you're looking at the seller's copies of the survey that he provided to you, and it showed that there was no shed in the back, and then all of a sudden, wait a minute, when you saw the house and you made an offer, there was a shed back there. Well, you need a new survey. Okay. That affidavit is needed in order to protect in case there were changes to the survey, but then the seller may have not been truthful about it. That survey is sworn on, it's under oath that the seller acknowledges that he hasn't done any changes to that survey. Okay, so you want to have that. But if the seller fails to furnish the existing survey or affidavit, for that matter, within the time prescribed, buyer shall obtain a new survey at seller's expense no later than 3 days prior to closing. Okay. If the existing survey affidavit is not acceptable to the title company or buyer's lender, buyer shall obtain a new survey, and then you choose at seller or buyer's expense. You got to think about it. The survey can cost about $400 to thousands, depending how big the house is, right? So normally in this particular scenario here, the house that is maybe 1,900 square feet in size, survey a lot that is maybe 5,000 or 5,500 square feet, it would cost you around 550. Just an estimate there for you. Who's going to pay for it? The seller or the buyer? Okay. If the seller did provide a survey, but the title company didn't accept it because the copy is faded, or it's the borders of the survey or information is missing from it because it's faded enough, or it's too dark, not acceptable, then who pays for it? The seller or the buyer? Okay. I cannot decide that for your buyer. Your buyer has to decide that for himself. Okay. Consumers, this is something that your agent need to be asking you, whether you're going to be comfortable in paying for it. In this case here, let's imagine that there is no survey. Okay. But your lender is going to require a survey. So one needs to be purchased. But the seller, the buyer feels that seller needs to provide the survey and the cost of the survey as well. So he's going to check box number 3, and he's going to give ample time for the surveyors to be out there and a survey to be provided. So you're going to put what, 21, maybe 20, 15 days, or maybe 21 days? 21 days should be enough. If it takes about 30 to 45 days to close on your home, 21 days should be enough for a surveyor to go out there. And you want to give enough time too, because if, let's just say here, you put 5 days. So that means that within that first week that you're doing an inspection, where you may or may not actually terminate this contract, let's say you may not actually want to purchase this home because you found things on the inspection report that are too great of a deal for you to purchase this home. So if you put 5 days in there, wait a minute. So the seller's already having, no matter what, as soon as they're under contract, the seller has 5 days to purchase a survey. It doesn't make sense. It doesn't make any sense because he doesn't even know that you're going to be buying a house or not. The inspection wasn't done yet. So give enough time. Let's say 21 days. Okay. Plenty of time for everybody to know that you're buying this house. You're through inspection. You know, if you guys had to renegotiate repairs were renegotiated. Now you're in it for good. Okay. You're buying this house and you're giving the seller time to pay for it and the surveys to come out and do the survey and provide a report. Okay. Objections. Buyer may object in writing to defects, exceptions, or encumbrances to the title disclosed on the survey other than items 681 through 7 above, disclosed in the commitment or other than items 681 through 9 above, or which prohibit the following use or activity. So let's say, for instance, you wanted to use this house here for activities other than residential. But then after you receive the survey or the commitment, or maybe perhaps documentation in regards to the association, in which you are not going to be able to use it for commercial use. Then you can object. In this particular case, we know we're buying this house for residential use. So then we put residential use. And you can even say only. Now, let's say you're working with an investor. You're working with an investor. He's from New York, one of those big old hedge funds that usually buy homes to lease it. They put it in their portfolio and they put it through a management company and they lease those homes. That's what they do. Positive cash flow stuff, right? Well, you might want to consider putting here for leasing. What if section 681 through 9 or through 7, something there says you cannot lease this home for at least the first year. Okay? You want to be able to object. You see, you're discovering these things as you go. You didn't know that prior. Maybe the listing agent didn't know. Maybe the seller didn't know about it. So you're discovering these things through the process. Okay? So you are able to object. Okay? Now, here's something quite important. Buyer must object to the earlier of the closing date. Listen to me carefully, agents and consumers. Buyer must object the earlier of the closing date or amount of days. If you see this amount in this box in blank or not applicable here, because you want it intentionally in blank, then you're going to be able to object through all the concerns that apply through these sections right here, 681 through 7 and 9, okay? The earlier of the closing date. So the day before the closing date, you can object and get out of this contract. So if you leave this in blank, they can object. It could be rightfully or wrongfully object something, but they will be able to object it till the day before your closing date. So I do highly recommend that you discuss it with your client, that you want to see this these documentations and being able to have maybe 5 to 7 days time to review and be able to object if necessary. Okay? I usually put 7 days. Very carefully with this one. If it's in blank, you'll be able to object until the last minute if you're representing your buyer. Is that a good thing or a bad thing? Am I doing the buyer a favor or am I doing a seller a favor? Well, that's, a very good question, actually, folks. Very, very good question. You know what? If I leave it in blank, I'm in favor of the buyer. And shall we want to object to the end of the day? Sure. So maybe we should try to leave it open as a buyer's agent, as a buyer, okay? Maybe beneficial to you. Maybe it takes that long for you to be able to come to your senses and object something you didn't like, Will the seller's agent and the seller agree with that being in blank is the question. So I guess if I'm saying most of my contracts go with 7 days, it's basically because we're dealing with pretty competent listing agents out there, and they're going to catch that. And if they see it in blank, they're not going to like it. So we're kind of pleasing them a little bit. 7 days should be enough for anybody, in my opinion. Okay, some may think differently. Now this section here, membership in the property owners association. So you want to check the box, and again, this, if it's a Florida contract, it'll be completely different from what I'm seeing here, right? But most contracts are going to have similar terminologies. Okay, so in this particular case here, if the home is subject to a mandatory membership, you want to click yes. Okay, and once you click that yes, it will trigger. I messed up. Wrong button pressed here, guys. Okay. If I click that button there, it will trigger the need to having this form right here. Okay. So if you say no, that form does not belong. Okay, it's not, then you don't need to prepare one. But if you do click on here, that form needs to be included with this contract. Okay, if you are in a homeowner subject to a mandatory membership, in other words, if you buy a house from here, you're subject to a membership and you have to pay yearly, monthly, whatever that is, that your client needs to know. And if you're subject to a membership, that membership has an association, directors, and there may be rules and regulations about an association in which you need to know about. Therefore, if you go back in here and you look at this form, wrong form. If you look at, why is this thing being click happy right now all of a sudden? Okay, maybe I'm moving this mouse too quickly. Okay, therefore, if you are going to be buying on an association, this form needs to be filled out. Okay. Here you're going to put the name and property of owners. You go to the matrix, usually the listings should have it here, managing company, right here. You just copy and paste right there. Okay. Now this is very important here, this section right here, very important. Okay. If you're buying a house that's within, that is subject to a membership association and there are rules and regulations, there may be, so therefore that home is subject to scrutiny from directors from that association. And let's say there are rules that say you cannot build a shed that is above the 6-foot fence line. And if you do, you may be fined and asked to remove it. Okay. Or if you're attempting to build a Florida room back there in your backyard and you do it without the consent of the director, sometimes, man, a lot of people don't like HOAs because of that. But then again, the HOAs are there to also protect that your neighbors are not going to leave like flat tires in front of the neighborhood, or trashy cars, or no grass, no, you know what I mean? Just because you want to make sure your community appeal is just as good as your own home, right? So that, you know, whenever somebody considers buying it from you, you know, they're not just buying your home, but they're buying the community that they're living in. So if you have a bunch of crazy neighbors doing whatever they want, you know what I'm saying, and putting whatever trash they want in front of their homes, you know, then you want to be in a HOA controlled subdivision. Okay. So, but if in some cases it may hurt you to be in on an HOA subdivision. So this form here allows the buyer, okay, to further investigate those rules and regulations of the association. And I'll give you an example here. For instance, that the home you're buying is a ranch style. So you have enough space in that home that you want to put a horse, okay? Well, that subdivision, that association, the rules may say that a horse is not allowed. Therefore, should you consider buying this house if you wanted to have a horse? Well, you're going to want to know. Okay. So this form allows you to find out. Or I'll give you another example. Let's say that you work for a company that requires you to drive home the fleet truck, and that fleet truck has commercial company names all over the place. It's a utility truck. It's got ladders. It's got a bunch of little wuggy stuff coming out and from the back. You know what I'm saying? You're a plumber or you're an electrician, but the association, the rules indicated that you're not allowed to park in the driveway a marked car or a utility truck. There's some communities don't like pickup trucks whatsoever, okay? Just because the small parking spaces, they don't want big old trucks parking in there, okay? You want to know through this, okay? Let's say that your favorite cable provider is not really cable, it's a satellite dish. Will the association allow you to have visible dishes attached to your home? Some communities don't allow it, guys. You're going to use this form to find out, okay? And here you're going to select whether the seller is going to provide that information and pay for it, because sometimes these associations make money with this, or the buyer is going to be. Now, if you check the 4 here, you're saying you're not required the seller, or you're requiring your seller or yourself to be able to review these documents. Okay, so you're saying here, buyer does not require delivery of the subdivision information. So in other words, you kind of lose the ability to object to certain of those things that I just mentioned to you. Okay, so if you have a need for a utility truck to be parked in the driveway, or you want satellite dishes, horses, just as an example, there may be other things such as like, your kids are allowed, and the ordinance of the city ordinance says you can have noise done to noon. But the subdivision says, no, 10 o'clock, you need to stop all noises, and you don't want association issues, and you don't want, the neighbors to be complaining that your son does drumming at night, you know what I'm saying? And whether too tough, you want to have this, you want this subdivision information done, okay? Here you also indicate who's going to pay for the transfer fee, because associations usually want to, they have to do some paperwork to transfer ownership, and they charge for that. Again, that's how the associations survive, is by charging these fees, okay? And then you choose whether the buyer or the seller is going to be responsible for those. Again, also part of your negotiation tactics, okay? If you're offering 10% below the asking price of the home, and you start hammering the seller with more cost, you may find yourself where the seller thinks that it's, this is not favorable to him. So you need to work that out with your consumer, or your consumer needs to be aware that your agent needs to be talking to you about these tactics and what would be the best way to put it together for your seller to consider your offer. Okay, let's go back to the contract real quick. Okay, so we were right here. Again, guys, please, once you come up with this offer, then buyers should be reading all of these paragraphs, okay, and sections here. There's a lot of stuff here we can't change. It's just part of the contract. So if these things you don't accept, you're not buying a house today, guys. Unless you want to have your attorney write up something similar to it, okay, because there are codes and obligations you need to follow, okay. Property conditions, okay, this is important here. Property conditions. In this particular case here, you're buying this straight up from a seller, so therefore you're expecting that he's going to have a seller's disclosures notice. On my previous podcast, we discussed this. We're going on 2 hours on this, guys. We are discussing. We want to see the seller's disclosures notice from the seller, okay? And you can check on my previous podcast. It talks about the seller's disclosures notice. And this is it. So you want to be able to check with your listing agent if a seller's disclosures was provided ahead of time or not. Okay, so if you go here on the listing agreement, there's attachments. You see, I attached seller's disclosures here, but sometimes seller's disclosures are not given up front. Okay, and this seller's disclosures are important. Okay. You're buying this house as is, but you want to know if what the seller has to say about it. Okay, he wants to be as transparent as possible with the seller's disclosures, but you don't have it available up front when you write that offer. Then you click buyer has not received a notice, and within, typically we put 3 days. Some attorneys may say give them more time. Some attorneys may say give them no time. You want a seller's disclosures tomorrow because you don't want to waste any time. We normally ask for 3 days. After the effective date of this contract, seller shall deliver the notice to buyer. If buyer does not receive the notice, buyer may terminate this contract at any time prior to the closing, and the earnest money will be refunded to buyer. Okay, so that the seller, again, time of the essence, guys. The seller needs to also be aware of these dates, and the listing agent is going to be there to also assist the seller to uphold these time-sensitive issues. Okay, so if you do happen to have the seller's disclosures when you're writing this offer, then you're going to check off buyer has received a notice already. And then you should deliver the offer with the seller's disclosure signed, okay? In this case, we have received the seller's disclosures. Remember, I do see it on, attach it here, okay? I can just download a PDF. And while the buyer is reviewing the contract, he's also reviewing the seller's disclosures. If he likes everything he sees, and he signs the contract and it's ready to go, right? Okay, following to the next page here. In some situations, the home, this home, because does not fall under the property tax property code, and it is not required to provide the seller's disclosures, then you would check this box over here. Now, this section is important. 7D, acceptance of property conditions as is means the present condition of the property with any and all defects without warranty except for the warranties of title and the warranties in this contract. Buyer's agreement to accept the property as is under paragraph 7D1 or 2 does not preclude buyer from inspecting the property under paragraph 7A, from negotiating repairs or treatments in a subject amendment, or from terminating this contract during the option period, if any. Okay, so what it's saying here is that all homes that are resale needs to be accepted as is, first of all, right? But it doesn't take away your ability to exercise having an inspection or renegotiating or asking for amendments for repairs of this home. But you need to understand it is as is, okay? So there's no warranties being given to anything, okay? So you need to use the proper instruments of this contract for you to do your property inspection, renegotiate it if you needed to, or you're buying this house as is. You have the option to say, buyer accepts the property as is, provided the seller, at seller's expense, shall complete the following specific repairs and treatments. So let's say before you did an inspection of this home, you are already aware that there are some broken windows in the back. Okay? So you can also state here, and this you need to be really careful with how you state it, okay? Because the seller may remedy the way he sees fit and not the way you want it to be remedied, okay? So whenever you prepare repair amendments and such, be very careful how you fill that out, okay? Especially here as well. But you can say seller at seller's expense will repair and replace broken windows, and you have to specify where in the kitchen area, whatever that is, okay? Or bedroom, in the bedroom. Bedroom 2, 1, or primary bedroom. Any of those things can be done, okay? But here's something to consider. I've seen a whole lot of times on my own listings, offers that come in and says, buyer accepts the property as is, provided seller's expense shall complete the following. Professionally, spelled it wrong. Professionally clean the house. Or cut the grass. Whatever it is, I see things coming up like that. What do I have to say about this? Well, for one, I must say that if the seller has multiple offers, and here you are putting conditions already up front. He's likely going to take an offer that doesn't have these kind of conditions in order, in order to get into the contract. This is you being transparent though. Right up front, you're telling me, hey, look, I'm buying this house as is, as long as you do these things. Okay. And that's before he even accepts the offer or you do an inspection of the home. There may be more things you find out later on the inspection report. So it's something that you have to come to terms with your buyer and finding out if this is going to be wise enough. If you know there's multiple offers in there, by adding something here, you're going to likely shrink your opportunity to having your offer accepted. That's something to consider. Something to consider. While you have an option period and you can work out these issues there, that may be more of the wise thing to do. However, in certain situations, if you don't want to waste your time spending money with inspection and right off the bat, these broken windows need to be repaired, and you want to make sure it's there, otherwise you're not going to buy this house, then therefore use that one, okay? For the most part, we go with buying a house as is, okay? And here we put NA. Okay. Lender required repairs and treatments. So again, the contract itself has clauses there that are going to protect you in case, let's say, an appraisal comes in and notates that there are some issues, some rotten wood around the windows. You're doing like an FHA loan, man, that underwriter is going to ask the seller to repair it. Yes, you haven't even owned the house yet, but the bank is going to say you're required to repair that, or we're not going to fund them this house. So there may be requirements done by the lender themselves after they see the appraisal. Okay, completion of those repairs and treatments are unless otherwise agreed in writing. Seller shall complete all agreed repairs and treatments prior to the closing date. Okay. So the home has to be ready to go. All right. Residential service contracts, very common here in Texas. I'm not quite sure about Florida because I don't remember having that back in the days. There. Not sure about other states as well, but over here, the way we look at it is this: residential service contracts. Buyer may purchase a residential service contract from a residential service company listed by track. If buyer purchases a residential service contract, seller shall reimburse buyer at closing for the cost of the residential service contract in the amount of not exceeding this amount. So if you put a dollar amount in there, the seller will have to reimburse you for that kind of money, okay? This is very typical here in most residential purchases. Let's assume that home you're buying is a resale. It doesn't have any manufacturer warranties on it, but you want to at least have a warranty that for at least that 1 year period, the first year, the home will have no defects, no problems with appliances or your AC or water heater. Therefore, you want to have an insurance in case if something does happen, it's protected, so you don't have to come out of pocket. Let's say you're putting all your life savings into purchasing that home, and the last thing you want is a problem to arrive, and you have to cough off more money to fix an AC you don't have, because your inspection said the AC was okay or repairs were done, and later it failed anyways. That's nobody's fault. It's by chance. Those systems sometimes they fail. If that happens, maybe the warranty could save you spending quite a bit of money. So I always say to my sellers that it's a good deed for them to say, I'm gonna, in good faith, I know this house is good for at least a year without any of the appliances breaking down, your dishwasher or microwave or water heater. In good faith, I'm going to say that I'm going to give you the warranty that for 1 year, you should have the peace of mind that you do have a warranty for it. Okay. I'm pretty sure things are going to be okay, but I'm going to give you this warranty no matter what. Okay. So I always tell the seller to be okay with it, and I think most listing agents do also say that. So very likely the buyer is going to ask for a amount to be reimbursed. He wants to have that warranty. Obviously, why wouldn't you? So typically, the companies that I like the most, that I like to recommend, they usually range from $400 to $600 a year. Okay, one-time payment for the premium, and then there are co-pays in each time you make a claim. But anyways, I'm putting $595 here. Now, this could also become an issue when the negotiations happen, okay? There may be offers on the table that does not have a dollar amount here, that the seller says, okay, everything looks about the same, but you know what? This offer does not have any warranties, any reimbursement for warranties, okay? So that could be an issue when it comes to, when they're revising an offer, okay? And other offers may be more attractive when they don't have a dollar amount, or the dollar amount is 400 instead of 600. That maybe you have a seller that's like literally looking at pennies. Okay, so every dollar matters for him. Okay, you have to consider that as well. You don't know how much money does a seller have, or how much does he need of the proceeds of the sale. So every dollar counts. So you need to, when you're making your offer, you need to consider this as an instrument as well, because this is taking it away from the seller's sale. It's a discount to the sales price again at the end of the day. Okay. So let's just say 525 is the number we go with. It's pretty common. It's what you expect that most people are going to be asking for. You go from there. Now, here in the state of Texas, a broker or a sales agent, agents needs to disclose. It's a Texas law that requires a real estate broker or sales agent who is a party to the transaction. In other words, if I'm representing you as a buyer, or I'm representing you as a buyer's agent, or I'm representing you as a listing agent, so I'm part of the transaction, or acting on behalf of a spouse or parent, child, or business entity where I may have interest. That things, special interest for those people to be successful with the sale of this transaction. In this case here, in which the broker or sales agent owns more than 10%, or a trust from which the broker or sales agent acts as a trustee, or of which the broker or sales agent, or the broker or sales agent spouse, parent, of child is a beneficiary, to notify the other party in writing before entering into a contract of sale, disclose if applicable. So if I am the listing agent and I am representing a seller, the seller is my son. I need to say here that I have a relationship. If I am representing myself, if I'm a listing agent and I'm selling my own home and I own more than 10% of that home, I need to say it here. Okay. So be careful. Look at agent remarks. Find out if there is that possibility there. That must be disclosed by the listing agent if he's aware of any special interest like that. So look for that information. If you don't have it, you just. This one is one of the ones that I think I would agree to leave it in blank. I'll put it not applicable in there, because later if you find out that somebody was actually, in fact, had 10% interest on a property, you end up going to court, and the judge says, hey, something should have been in there, not applicable. You know what I mean? So that one I would say probably leave in blank. It's a good idea. Okay. Again, I'm not an attorney and I'm not here to give you any legal advice. Okay. Closing date. That's important as well, guys. The closing date is important. Okay. You ask for too much time from the seller may find another offer attractive. So when needing financing, you know that you need to be aware of how long it takes for you to get the loan finalized and closed. Okay. Typically, nowadays we're seeing lenders being able to close in 20 days. Okay. Although they're asking for 30 days within these contracts, just in case they have any hiccups, any storms, or any holidays that may be within that month period. 30 days should be what you want to be asking for the seller to allow you to obtain financing. If you need cash, then you need to ask your title company how soon can they write up a commitment for you, and how soon can they have all the documents ready for the sale, the transaction to happen. Okay, that could be 5-10 days. All right, so then you put 10 days in here. Okay, but for financing, I normally like to stay within 30 to 45 days, because there are going to be some days lost here, possibly lost within the option period where you're doing an inspection. Maybe your lender hasn't started yet because he hasn't received the copy of the contract. Your agent didn't send a copy of the contract right away. The appraisal wasn't ordered until the end of the option period. Those accidents do happen sometimes. Then I normally ask for 45 days. But now, if there is another offer that asks for 20 days and everything else is the same, the seller may find it more attractive to go with the offer that says the least amount of time for me to get my money. The seller saying, of course, right? So this day does play out a role to how attractive your offer looks, okay? In this case here, we're on the 23rd and we want 23 days. It will fall in, yes, agents, look at the calendar. Make sure it's not on a Saturday or Sunday that you're putting that closing day on, okay? And ask your buyer if he would prefer a Monday or a Friday. Maybe their work schedule would be different, okay? I get a lot of offers where the day is on a Sunday. Did they do that on purpose? You know it's going to fall on that Monday or a Saturday. They just didn't do it right. So look at it. But it's important to know what your buyer wants. Does he want a Monday? Does he want a Tuesday? Does he want a Thursday? Because Wednesday is the day that he gets off. You know what I mean? Or Thursday is the day they get off, or their off day. So they don't have to ask for a day off from their bosses. Okay. So in this particular case, let's close at the end of the month, 30 days plus some, just to give enough time for everybody. Okay. Perhaps even the seller sometimes. Look, sellers want their money right away, but sometimes sellers are likely needing more time to move out. Sometimes they like the 30 days time because, I just listed my home in the market, but I haven't even started packing yet. So 30 days is a good thing for me. Maybe sometimes you're going to find it where you're buying a house in cash and you ask to close in 10 days, but that's not enough time for the seller to get out of there. Guys, let's think about these things. Let's talk to everybody and discuss what's going to be the best. I see it more often than you think, that where there's arguments and dislikeness of one another because of lack of communication, period. Okay? Let's discuss these things. Closing day, you set up in July. It's very attractive in the next month. There's only 7 days or 8 days left in this month, right? Okay. And then we come here to possession. Okay, possession. This is where I was coming to talk about with you right now. As far as possession, right? Do you want the house upon closing and funding, or will you accept giving the seller more time, like lease it back from you? In some situations, a seller, for financial reasons, need to sell their home and be able to collect the funds from the selling of that home in order to be able to purchase another. Okay? In other words, the purchase of their new home, the seller's new home, because they're moving somewhere, right? They're going somewhere. The purchase of their new home is contingent to the sale of their existing home that you're buying. Okay? But he has to close on his existing home first for him to put the hands on the money he needs to buy the other one. Okay? So therefore, in this particular case, sometimes he's not going to be ready to completely leave the house the day we close. So you need to either agree to close, not buy this house because maybe this is something that the seller needs, and he's upfront letting you know way before you put an offer in this house. Okay, and then if you choose to ignore this request, he's going to go with the seller that's with another buyer that likely respects it. Okay, of course you have to conform to your own needs as well. Will this accommodation work for everybody? Something that needs to be discussed maybe when you're putting the offers together. Okay, but in some cases you can close on the loan. The house is now yours, but you have a temporary residential lease. Then now the seller who sold you the home is acting as a tenant for you temporarily. And that contract is that temporary lease is going to set some boundaries. And it's going to state how much he's leasing for how long he's leasing for, and his obligations to security deposit, and his obligations to making sure the home is in good conditions. Okay. So you may run into that situation. And it's sometimes, like, for instance, I have won a highly competitive house. Okay. So in other words, there's multiple offers in this house, multiple offers. We were very different amounts. And some of these buyers are very aggressive, putting bidding much higher than the asking price. Okay, well, in this particular case, guys, you know how I won this case? I may have not been the highest offer, but I was the only one, and the listing agent told me I was the only one that identified that this house is too big for a single person, a widower, okay, a single person to move that entire house, including warehouse and garage things. And it was impossible for that person to do all that within the 30-day period that we were asking to close. So I convinced my buyer, or I suggested to my buyer that this would have been attractive for the seller. And I was the only one that offered a temporary lease to the seller. Therefore, the seller appreciated that offer more than even the dollar amounts that maybe somebody else overbid my offer. So those are the things to consider sometimes, that there are other things that could be more attractive to your seller. The seller, not to your seller, to the seller that you're trying to have that offer accepted. Okay. Okay. So, but in this case here, we are not aware of any contingencies. The seller does not require any house is vacant, guys. Okay. So you want upon closing and funding. Don't forget to check that box. Special provisions. Oh my God, special provisions. I can only relate to you what I've been taught. Okay. Again, I'm not an attorney. I have Legal 1, Legal 2 updates every year or every other year. How my legal license requires me to know certain things about these contracts, but I'm not a lawyer, and I don't want to misrepresent anybody here. But what I know for sure to be a fact, that all information in this field needs to be factual. And if you don't know how to make a factual statement, you may very well be changing the conditions of the rest of the contract by what you're writing in here. Okay. So in my brokerage, my brokers do not allow anything to be written on this other than not applicable, so that we're never liable for something written here that your buyer was expecting it to be true, but then it fell into in the hands of a judge, and the judge is like, that doesn't mean squat, or whatever you put here, harm this section here, and you end up, causing more harm than you're trying to avoid. Okay, so the best thing is to put not applicable in here. And if there are all the demands, all the things that you want to be factual to the contract, use an amendment. Use an amendment, okay? Settlement and other expenses. So for FHA, VA, or even conventional loans out there, they allow you to, they allow the seller to contribute towards some of the expenses, okay? So the following expenses must be paid at or prior to closing. Expenses payable by seller, seller's expenses. Releases of existing liens, including repayment penalties and recording fees, release of seller's loan liability, tax statements or certificates, a preparation of deed, 1/2 of escrow fee, and other expenses payable by seller under this contract. Seller shall also pay an amount not to exceed X amount of money. So again, you need to be aware of what the FHA guidelines allow you to. I think FHA allows you up to 3% contribution, or is it the other way around? I must know this, right? But up to 6% between FHA and conventional, 6% towards closing costs can be applied towards closing costs, right? Buyer's expense, which buyer is prohibited from paying by FHA. So FHA cannot pay for VA, taxes, veterans, land, board, or other government loans programs, and then the other buyer expenses as allowed by the lender. Okay, so this is the one-time opportunity that the seller has an opportunity to contribute towards those expenses. Okay, again, this amount cannot exceed your guidelines, your FHA or conventional guidelines, which is either 3 or 6%. If you are doing cash, you wouldn't need it. You just take that off the sales price, right? Okay, this comes out the same thing. So it's typically when you need financing that you're asking for contribution. Let's say that you can buy this house, but you're missing $3,000 towards some of these expenses. You can ask the seller to pay $3,000 towards. Now, this amount is coming out of the sales price. It's almost like you're discounting the sales price, guys. Okay, it's not going to your pocket. It's going towards expenses that are going to be on the closing disclosure. Okay, so in this particular case here, this could also harm your offer, right? So if you have multiple offers in there and they all look the same, but yours is the only one asking for a contribution towards closing costs, that could be a problem. They may accept one that is not asking for any dollars, okay? So it's important for you to maybe be more prepared and have more savings to buy this house. But in some cases where the market is low demand and more homes for sale, then in this particular case, sellers are more likely to accept your offer and take whatever buy they can get. Okay, so then in this particular case, why not ask for some money to be covered by the seller? Okay, so it really depends on what kind of market you are and what kind of situation you're in, whether you need it or not. Okay, what it's not wise to do, guys, is to raise the sales price for that amount to be applicable, because that's going to bite you in the butt afterwards. I tell you that. It's going to bite you afterwards, because these appraisers are aware of this little trick thing. You know, oh, you raise the price by $3,000, okay, and then boom, you take away $3,000 over here. Then therefore the seller doesn't come out with that money out of pocket, right? Okay, well, yeah, that can bite you in the butt afterwards. Don't do it. Okay, so this section here, there's nothing I can do about it. Just go ahead and read it on your own terms. Mediation, look, default, that section. I guess we were going to talk about this here. Case of default of the contract, meaning If you never turn in the earnest money on time, you pass the 3 days, this is where it can go to because you're in default of the contract now. Okay. Mediation be the step before you hire attorney, and attorney fees, if they are ever involved in a lawsuit, they're all going to be here. And how escrows is handled in case of mediation, any issues. Okay. Okay. So in case of any issues that you may have, communications that need to be done between seller and buyer or title company or attorneys or whatever, this is a section where you put it in. More often than I see this in blank by agents. The listing agents are not putting it, or the buyer's agent are not putting it here. This is very often forgetful. I want you all to be sure to remember that this section 21 of notices are always filled with at least address and email. Oh, but the listing agent's now going to have the contact information of my client. I don't want that. No. He's under obligation to their side of their side of the party. He's under obligation of the seller. Okay, so there's not a whole lot of things that he can tell your buyer. Okay, so even if he does call your buyer for whatever reason, there may be some penalties involving with that. Okay, and first and foremost, your client is under obligation with you. He has an agreement with you. You're his representative party. So if the agent has something to say to you, he's going to contact you as the agent, not directly your party. This is strictly for notices between seller and buyers. They have the right to talk to each other if they want to. Okay. Or the title company wants to send a copy of the commitment directly. Okay. Or notices of any lawsuits are going to be made through here. So put an address and put an email, at least that. Okay. Don't forget. Okay. This section here, 22, agreement of parties. Okay. So, if this home requires financing to be able to purchase it, you need to be aware that you have to have a third-party financial addendum. You want to have one to protect your buyer from misfortunes of financing. Maybe he gets declined eventually. Okay, so those things you need to be aware of. So therefore, on section 22, if you don't check this box over here, then the third-party financial addendum is not applicable to this contract. You may have written one and seller signed it, but it's not attached to this contract if you don't check that box over here. Same thing goes for the addendum for property subject to the mandatory membership in the Property Owners Association. Another form we went over here just a little bit. If it is not checked, and I see it all the time, that it's not checked, it's not part of the contract. Let's say you do agree to have a seller's temporary residential lease like we talk about. Instead of taking possession of the home immediately once you close, and you have a seller's temporary lease, you want to check that box over here. Well, let's just say your offer wasn't accepted, but you want the seller to consider your home as a backup offer. Well, therefore, you want to check the box for backup, addendum for backup of the contract. And you're going to get that addendum and add it to this contract for backup purposes. Okay? In case the first offer fails, then you are the second in place, period. Your backup offer comes back on. It's already accepted. If he signs your backup offer, it's already accepted if the first offer fails. Okay? Anyways, boom. So don't give up sometimes. It's best for you just to do as a backup if you lost on the initial offer bidding war that you were in. Short sale addendum, all the other things here. What else do you want it to be here? Well, if you have a non-item realty, addendum. It's not here to check off. It should have been. It's not here. You want to type it in there. If you don't, the listing agent and the seller can say, I was never part of the contract. Okay? So you want to check that box as well. Okay? So those are the things that you need to be remembering every time you're filling out a contract. And if you're the consumer and you're reviewing this contract that you're about to allow your agent to send it off, make sure that he's accountable for making all this information is in there. Okay? And over here is a section that if the buyer or the seller have hired an attorney to review all these documents, or consult an attorney before signing, track rules prohibit real estate license holders from giving legal advice. So read this contract carefully. Okay. So in other words, if there any of these things here you want a advice, a legal advice in regards to, I cannot give it to you. You have to contact an attorney to get it. Okay. I can give you instructions and tell you how to fill it out and why you should maybe put together some of this information like so. Can't give you an advice how much you should put it over here. I can't. Or what day you should close. No. Can do recommendations maybe, but not if it's going to apply it to you legally. No, I cannot. Okay. So if you want to hire an attorney to review before signing, this is where your agent is now having to put it. Okay. The last section over here, this is when the agents do execute a contract. All parties signed, the seller signed, everybody signs and is executed. Here's information of the brokers involved. Needs to be completely filled out. Buyers agents out there, please, if you're submitting an offer, make sure the listing agent's information is filled out completely, including the license numbers. Don't be lazy, guys. Fill the whole thing out. All that information is available on Track or MLS or on your state's commission's website. All that information is going to be there. Don't be lazy. Oh, I want to get the offer out. It's fast. Don't be lazy. This listing agent, in order to accept this offer, the seller to accept this offer, he's gonna give him his input to how well you filled out the contract. Well, how many of these blank spots you left in blank that you needed to fill out? You know what I'm saying? Don't be lazy. Fill this out completely. And last but not least, don't forget to put your commission on the bottom. Sometimes that comes out in blank. Okay? This section here is where the title company is going to receipt your earnest money, and your listing agent, now escrow agent is going to receipt your option fee as well. All the contractor receipts or additional earnest monies are all filled out on this page. Okay? Let's go back here real quick. We're almost done. So this is kind of like how you fill out your contract. Okay? And then you have your third-party financial agreement that here you're going to indicate to the seller what kind of financing you're going to be requiring, whether it's conventional, FHA, or VA, USDA. You have to put it in here. And for the agent's aspect, make sure you fill out this correctly as well. Now, you need to have a pre-qualification letter or maybe a conversation with the loan officer or originator to find out what terms are going to be held here for the purchase of this home, okay? Because this instrument here will protect your buyers. This is it. This is the form that protects you in case your financing doesn't go well. So in this case, for instance, we know that it's going to be a conventional. It's only going to be one first mortgage loan, and the principal amount of financing, what was it? Was it 95%, right? Of 245? So it's going to be 257 and let's say $900. Okay? That's the amount being financed. And it's going to be a 30-year, doing 30 years not exceeding an interest rate. You got to know more or less what interest rate look like there. Like for instance, if your client needs to have a 4.5% to be able to qualify, a 5% interest rate will not qualify them because it increased the payment, and then it's beyond the guidelines of that loan. Then therefore, under this here, your client may be declined. Okay, so therefore, you want to say 4.5, but then the rate skyrocket to 5%. Under this addendum, you're protected on that interest rate. So that interest rate is important, guys. Okay, so all of a sudden the interest rate went from 4.5 to 6%, and now there's no way you can buy it because your payments are too high. Well, you're going to be able to terminate this contract based on failing to be able to provide financing. Okay, now it's a 30-year fix, and the broker may charge up to 1%. In other words, now if you end up getting, for whatever reason, the loan is asking for more than 1%, loan estimating cost-wise, the origination charges are more than 1%. And because it's more than 1%, then therefore you don't have enough money to close on it anymore. That's how you get out of this contract as well. I mean, you can't afford it. So if you put no dollars in here, that wouldn't be the case, right? So 1% is usually what the origination charges are. Then I usually put 1% in there, okay? Check with your loan officer. Find out, get a fee sheet from your buyer's loan originator, okay? That's important. Now here, this section here hardly, gets forgotten sometimes. If it's a conventional, you want to go ahead and click this here. This contract is subject to a buyer obtaining buyer approval, okay? So if you don't check that box, if buyer cannot obtain buyer approval, buyer may give written notice to seller within, the norm is 21 days. More than that, I think sellers are not accepting much, or the listing agents are having a little bit of an issue. If your contract has 30 days to close, and you put 30 days in there, 30 days may be needed to find out whether you're approved or not, for sure. You want a loan commitment from your lender within 21 days, but sometimes they can take 30 days. But if your contract has, let's put it this way, if your contract has 30 days to close, well, this is a little tricky. Should lenders be able to give you at least a loan commitment within 31 days? Well, knowing what I know, yes. Would you prefer that your lender could tell you whether you qualify to buy this house or not? This is beyond pre-qualification, right? Because pre-qualification gives you the bare minimum of pre-qualification. It means that you fit one of the guidelines, okay? They may have reviewed most of your the primary basic documents, or maybe they may not. Sometimes they give pre-qualification letter just based on credit and then the information you put on the application. But they haven't reviewed your pay stubs, your bank statements, make sure you qualify for the amount of reserves you need, the income is there, where you said, what you said on the application may be different from what you can actually read off of the pay stubs, because there's a method to actually how to get your income from your pay stubs or your tax returns for that matter. So the pre-qualifications are not a loan commitment, okay? So buyer, do you want the lender to be able to give you a commitment sooner rather than later? Yes, of course. You don't want to waste time or waste somebody else's time. So I think the industry here, at least in my market area, find a middle ground here where, and I want to be careful with this because honestly, for the sake of my buyer, I want to be able to give him as much time as he needs to be able to qualify to buy this house, right? But the seller wants to know also sooner than later, can you actually buy this house? I need this house sold in 30 days, man. You know, I don't want to know last minute whether you can qualify or not. So there is sort of like that industry accepted standard, and that's 21 days. I mean, it used to be 25, but it's gone to 21 days because now lenders should be able to close in 20 days. Period. Okay. But things could happen. Unforeseen things could happen. So 21 days is usually what we put in this market. That's what we recommend. Or check this box. This contract is not subject to any buyer's approval. That's tricky. If you do that and you don't get approved, you may lose your earnest money deposit. By the way, this here will likely protect your. If you get a decline before the 20 days lapses, okay, it's 21 days from the execution date of the contract, right? So if you get a decline by your lender, you can exercise a termination based on not being able to fulfill the terms of this third-party agreement, okay, financing addendum agreement, okay, and therefore be able to collect your earnest money back without loss. Yes, your seller lost a ton of time. The only thing he's walking away is with that option fee. Yeah, because you end up not ever closing, okay? So yes, so he's paying a heavy price for keeping that property off of the market for 30 days or 21 days for this matter. You know what I'm saying? So past that 21-day period is when things get a little bit more complicated. You decline on there, then the seller is like, man, you know, will you lose your earnest money deposit? I'm not sure. I'm not the one to tell you that, okay? So if it was FHA, however, if you were to hear and market FHA, one thing that comes in automatically with this third-party agreement is that if the appraisal value doesn't come in at the sales price, then you see here, require provisions. If the financing described above involves FHA insured or VA financing, it is expressly agreed that notwithstanding any other provisions of this contract, the purchaser or buyer shall not be obligated to complete the purchase of the property described herein. So therefore, look, if the loan is being based on the sales price up until the moment the appraisal arrives, okay? The bank doesn't want to finance a house that is more than what the house is worth. So therefore, if the appraisal comes in lower than the sales price, then therefore the loan is going to be based off that appraised value. In this particular case here, it will disqualify that loan. The buyer wouldn't be able to buy it. So therefore, you want to put it here, that the appraisal needs to be at least at 245. If it comes in lower, then we got a problem. Either the buyer has to come up with a difference himself, or the seller has to reduce the sales price in order to meet that appraisal requirement. And therefore, or it can't terminate a contract because it is also falls on the grounds of being able to finance it. You can't finance a house that is worth less than what you're paying for. So the banks are going to spit it out, okay? Anyways, let's go back here to another form. So we talked about the mandatory form here, the property water district here. You want to properly disclose all the district information as I've shown it to you here before. In this state here, we can find it very easily through our MLS, and you have all that information. You can fill it out, properly fill it out this and then turn it in with your offer as well. You want if the seller hasn't provided it, this is a notice from seller to you, by the way. So sometimes buyers don't have to fill this out, but you also, for the sake of disclosure and notices, I would tell that your buyer that you're on a water district. So therefore you may pay higher taxes because of that as well. And your water is being treated and recycled again. You know what I'm saying? It's not a city water, okay? Or something in that sense. Okay. And that's pretty much it, guys. I mean, everything else here, it's pretty much what the title says, the non-realty item addendum. I said, if you want a refrigerator, washer and dryer, or furniture, or any other fixtures in that house that you could want to consider to sell, to leave it in the house and be part of the sales price, you want to put it in there. If it's not a realty item, if it's not considered real estate property, then it needs to go on that form, okay? Uh, Insurance, notices, special flood hazard areas notices, you want to have it there. The general information, you want to have it there. Broker notice. Now, these items are not required to be sent with the offer, guys, okay? This is just between you and your buyer's agent, okay? The information about brokerage services, a special area. These are only disclosed between uh, the representation party and the consumer. Okay. Now the disclosure of relationships. Yeah, you want the seller to sign this one. Okay, and the listing agent to sign this one. But that's it, folks. I have not looked at here to see any other questions. This is a very, very, very long video. Of course, there was more educational things in there. Hopefully some of these agents that are in my Facebook or in my YouTube channel has a chance to go over a couple of things and find it useful, what I've said. Please correct, if anybody wants to correct me on anything, please go ahead and do so. Send me any comments. I love to talk to you. I love to meet you, make new acquaintances. So if you think that I'm doing something incorrect, please go ahead and tell me. I will try to correct it for you next time I come along live. And don't forget to subscribe to my YouTube channel, John Canali Correa. And I'll be very pleased if you do. I'm going to stop sharing here so you can see me completely. Every Wednesday at noon, I'm going to come out here and try to bring you as much information as possible. Some of them are not going to be as long as this one over here, I promise you. If you stuck around to the end, it means that you were finding this information useful. A lot of the young agents out there, I think, will definitely appreciate it. Okay. If you, the consumer, had spent the time to listen through this here, by the way, every time you purchase a home from me, I walk through all these things here with you. I basically do a Zoom meeting with you, just like we're doing right now, where I explain all of this information. We type it in together. Okay. Um, it's one of the services I offer. But anyways, tune in next Wednesday at noon. I'm going to talk about maybe this read. If I finish it, I'm going to talk about this book and any other things and answer any questions you may have through the week. And I thank you for sticking around and apologize for those if this is still taking too long. I've seen some people come in and out and they're like, oh my God, he's in the middle. He's on the row here. But I promise you, some of my videos are going to be shorter and maybe more on point. Maybe I'm doing this whole thing the wrong way, guys. I'm not sure. Maybe I'm talking too much. But again, this is more educational and I had to take this time. Okay. Well, thank you. It was a pleasure. And I hope to see you again and see all your comments and likes here in the next couple of days. And I appreciate your time. Thank you so much. And I'll see you soon.